Hello guys, welcome to my channel. I still remain treadmill, the spike king. But today we are not catching spike, we are actually trading against spike. I'm trying to show you guys the strategy on how you can use in trading against spike and make money. Because sometimes there's how you see a perfect and a nice setup. You're supposed to trade and make money, but you're scared of the spikes because it might disrupt your earnings and shorten your earnings and make you run at a loss. So I'm going to show you guys today the strategy and how you can trade against spike and where you can place your entry and you're on a safe side. So please, if you're watching this video, I'd like you to like, share, comment, and please, I'm begging you guys to subscribe, turn your notification bell so you can get a new video whenever we drop a video online. So guys, quickly, let's start. First of all, you need your indicators. So like I always say, I like using two indicators, just to indicate indicators, two important and necessary indicators. You don't just need to mix up your chart with plenty of indicators that will just get you all confused and mix up the whole thing. So you just need two important indicators that will just show you what you want and what you need to do. So first, you add your envelopes and your moving average. Okay, so on your envelopes, you period is floating, shift 0, deviation 0.9, method exponential, apply to open, your style upper band 2 pixel green. You can use any color you like, but I love green and blue because it really comes out more bold and I can see it clearly, like maybe some other colors that just faint or something. So upper band is 2 pixel color green, lower band is 2 pixel color red, and done. And you go to your indicator again, your moving average, period 3, shift 0, method exponential, apply to close, style 4 pixel color blue, then done. Okay, first of all, you, like I always say, you need to really understand and know how to use these indicators, because it's the only thing, is the only tool that will guide you and help you have a proper trade and a successful trade. Okay, because if you don't know how to read it, you won't definitely understand anything. So like I always say, if you find difficult and it's always something that is more hard and difficult for you to understand because you don't have a clear and an understanding knowledge about this. I always advise you check on our description page and you click on our telegram link, you join, and we will teach you, guide you, and tell you what you need to know and how to use these indicators, and teach you more strategies on how you can use for a better trading on forex, because we want everybody to make money. We all came here to make money, so money we will make. Okay, so first of all, after doing all this and putting your indicators, I'm going to show you something, how you can read this indicator. So first, as you see from here, whenever the market comes down to this level and it hits the red line, it goes up. Okay, it comes back here, it's the red line, it spikes. Whenever it goes up, that means the spike, it spikes up again. And this point, it didn't come down here, but it was still at this level. Okay, and it spikes, came back still at that level, and it spikes, came back still at that level, and it spike. So you see, that's how you that's the reason of this indicator. It shows you where the spikes are actually coming from, so you have a proper knowledge on where to enter your trade, where to initiate your price action, so that you won't run at a loss at the trade. Okay, So quickly, guys, let's do this. Like, before I enter any trade, okay, I always tell you guys, I'm a big fan of support and resistance, because that's the tools I use in having a better analysis on where I'm supposed to place my trade, and it will help me show me a strong position of where I can place my support and resistance. And how do I mean by a strong position? A strong position is that very place that the markets have hit, like the market have been around, maybe coming up for a retest, came down, goes up, comes down again, goes up at that very point, and it touches that position for like 3 4 5 times, then you know that's a strong position, and that is where you have to place your support and resistance. And I always do that at the most recent positions where we have those touches. Okay, I like using the most recent positions because that will help me analyze the chart well. Okay, so let's draw our support and resistance. Okay, this will be our support and this will be our resistance. Okay, so as you can see, what you look out for is where are these spikes actually coming from. As you can see, the spike, they keep coming at this very line. That's the support line. As you can see, the spike, they happen more on that support line. Like whenever the market comes down to these positions, spikes. So what we are waiting, like I always say, in forex, you don't rush into trade. You have to wait, you have to be patient, because patience is the key. If you don't have patience in forex, you lose a whole lot of money. So you have to be patient. So what we are actually going to do now, we are waiting for the market to come down to this level. Okay, because we are actually expecting a spike from here. So if you enter the trade at this position now, you will definitely run at a loss, because it will actually spike from here. Hopefully, that's what I feel from my analysis and everything. I feel the market will actually spike from this position here. Okay, so we have to be patient and wait for the market to get down to this position. If it doesn't actually spike, it will spike somewhere around here. So we just have to wait. After the spike, that's when we enter our trade. Okay, so we are expecting to catch a spike around this position here. So we just wait for the market to get down here, so we get it, so that we will have a spike, and after the spike we'll enter our trade. Okay, let's wait and watch, guys. Okay, we are expecting to catch a spike at this position. From here to here, there should be a spike within these positions. And immediately after the spike, then we enter our trade. That's how you get to trade against the spike, and you make your profit. And remember, this kind of trade, you don't just enter the trade and you go out from the trade without noticing, like without being around to manage the risks and everything. It's just a short trade that will happen in short period of time. You just go in, you make your profit, and you go out. So you have to stay close to your trade, monitor your trade, and when you made your profit, you go out before the spike gets you out. Okay, so we are expecting our spike from here. After the spike, you are definitely going to buy. Sorry, definitely going to sell, because we are trading like this is boom 500. When you are in boom, if you are trading with the spike, you are buying, because the spike is actually shooting the market, shooting the price of the market up, so you are buying. If you are trading against the spike, you are selling. So today we are trading against the spike, so we are selling. As you can see, the market is selling at the moment, but we are expecting a spike any moment from here, so you don't have to rush into the market because it's selling right now, because a spike might happen here, and that one spike might change everything and get you into losses. So you just have to wait for your analysis to come out as you predicted, because for the prediction of this very market, we are expecting the spike to happen any moment from here to here. We should have a spike. Okay, and after the spike, we are selling. And one thing you need to know before entering a trade, you have to understand the market well, the market structure, like which way is it going, is it an uptrend or a downtrend? But at this moment, I would say this is an uptrend, which means the market is actually buying more than selling. But that's not what we are trying to do. We are trying to sell even when it's buying, and that is how we trade against the spike, because I love trading against spike, and it really works for me a lot. Okay, it just help you with a profit in a really short while. Okay, right, we just got the spike here, but it's not that strong enough. Okay, so we are still expecting another spike before the market gets down. Here we got our spike, but not that strong enough. So I think we should be expecting a stronger spike before we enter the trade and start selling, because we're actually selling and we are going to make profit. So just be patient and wait and see how you can trade against the spike and make money in a short period of time. Okay, I call this a short time market. That's how I call it, a short time market with profits, because it's just now then you're out making your money for the spike kick you out. So don't forget that if the spike doesn't happen between these positions, the next time the spike is going to happen will be around this position here. So if it actually breaks this very position, it doesn't spike, then we still enter the trade, because our next spike is actually going to happen somewhere around this position or this position. Okay, so if it actually breaks this position and we don't have a spike, we are definitely entering the trade, because the other spike we are expecting will happen somewhere around here. So before we get down here, we are done with our trade and we are out. Okay, so let's just watch and see if it's gonna give us a spike here or not. If it doesn't give us a spike, then we are entering the market. Okay guys, get ready. Whatever happens here, a spike or no spike, we are entering the market from this position. Okay guys, let's see. The most important thing you need to know about forex is your entry level. You have to have a good entry level. If not, your trades will always come out at losses. So you have to have a good entry level. You don't just rush into trading. That's why you have to be patient on forex. Like now, the candles is breaking that position we were talking about, expecting to have a spike. So we just wait for the last candle to finish in 1 minute. After this 1 minute candle finishes, then we are entering a trade, because we are still expecting a spike from this position. If a spike doesn't happen here, like I said earlier, the next time you're going to have a spike is around here and around here. So if it's not happening here, then we are going to enter our trade, which will come out successful. Okay, now we are entering our trade. So as you can see, our trade is running and we are profits. So like I said earlier, this kind of trade you have to stay very close to your trade, because it's just a fast, I call it a fast short trade with profit. You don't waste much time. You jump in, make your profit, jump out before the spike kicks you out and takes all your money. Okay, like I said, that since the spike didn't happen at this position, the next place the spike is going to happen is somewhere around here. And what we are going to do now is we have to make sure that we close our market before it gets down to this position, because the moment it gets down to this position, there must actually be a spike, and it will take our money and we will be at loss. So what we do is we monitor the trade, stay close, and monitor your risks, manage your risks well, because it's just a short making money trade. That's how I call it, short making money trade. Just jump in and out with profits before the spike comes in. This is how you trade against spike, guys. You can see we at profits, at profits. Okay. I'm using a $10 lot size. You can actually use a bigger lot size to make more profits. Okay, but you have to make sure that you have a bigger account, like you have much money in your account. Okay, to use a bigger lot size so that you won't lose all your money in just few seconds. Okay, guys, you're in profits. Like I said earlier, I have to stay close to you, to your to your to your trade, because this is a fast making money trade. You jump in, jump out with profits before the spike kicks you out. So you have to stay close, manage your risks, watch this position very well, because we are expecting to catch a spike from here. So before the spike happens, we've done making our money. Okay, guys, you can still open more positions, use a bigger lot size. All you have to do is just monitor your trade and manage your risks well, because the moment the market gets down to this position, there will actually be a spike. Okay, so you have to stay close, manage your trade, and make sure the market don't get down to this level, because definitely if you get down to the level, I'm assuring you that you're going to lose your money, because we are actually going to catch a spike at this position around here. So you have to stay close, jump out with your profit before the spike happens, because if the spike happens, you're definitely going to lose your money. So guys, let's monitor our trade and jump out with much profit. Guys, this is how you trade against spike. This kind of trade is just a jumping jump out trade. That's how I call it, jumping jump out trade with profits. Okay, don't take much time, just make your profit in little time, like a little time frame. Use it to make your money and you go out of trade. Okay, see you're on profit, guys. You're on profit, guys. This is how you trade against spike. So guys, please, I'm begging you guys, if you're watching this video and you're watching it right now and you actually like what I'm doing, actually like the strategy I'm showing you guys, please, I'm begging you to subscribe to this channel. Subscribe, hit the like button, hit the notification button, so you can get more videos from us, guys. Don't forget to subscribe. And if you're having much difficulty, like I'm always saying, if you have difficulties in trading and in making money in forex, you have challenges, you can check on the description page and click on our telegram channel. Join our telegram channel, and we will teach you some things you need to know and make money in forex. Okay guys, we are about to jump out of a trade right now before the spike comes in. So I think the next candle we are expecting should be the last candle for us to end our trade before the spike gets to us. So guys, I think you should close your trade here. You can see we make money. So that's it, guys. That's how you manage your trade. You manage your risks and you make profit in a jumping jump out trade. I call it the jumping jump out trade. So guys, I had to cut the video short and take you guys to where the spec actually came out. As you can see from the video, this is where the spike actually happened, just at the positions I told you guys it was going to happen. And when the spike happens, check out where the spike got to. This was our entry. This was our entry, guys. This was our entry, guys. Okay, but the spike now happens and it breaks our entry. It goes up, goes up, goes up, a stronger spike, goes up again to that level, and at that level now we've lost all the profit we would have made, and we'll be running at losses now. So yeah, that's why I say it's very important for you to stay and monitor your trade and manage your risks, so you won't lose your money when the spikes open. Okay guys, this is what I was talking about. The spike actually happened where I told you guys to happen. So guys, this is how you trade against spike. So please, if you don't understand this strategy on how to do this, guys, like I said, check on our description page. You see our telegram group, or you see my WhatsApp link. You can talk to me directly on WhatsApp, or you join our telegram group and we will teach you and give you the ideas on how to trade on forex. So guys, don't forget to like this video, subscribe, turn on the notification bell so you can get more videos from us, guys. I really appreciate you guys for watching. Thank you very much. Bye bye. I still remain Trade Meal. Bye and out. Different.